I'm here with Jason Titman, the CEO of Swyftx, and welcome to Crypto Finder. We're going to be talking a lot about the Australian market and the crypto exchange market and the crypto market as well as we're going through a really interesting time right now. Jason, what are you sort of seeing right now? It's really moving around.
It's an interesting question, Fred. And I think, it'd be interesting to see what all of your viewers think as well. Look, the 4 year cycle that we all thought and were as expecting has kind of turned on its head potentially a little bit. It's flat. I think we've got to look at two things though. If you look at the market in itself and trading volumes and asset prices, there's a lot of flatness out there, the fear and greed index, etc., sitting where it is. But if we look at what's happening in the industry, and I think that's the other side of things, there is a lot happening behind the scenes. So it's almost as though we've got a two-speed situation. We've got the markets which are at the moment kind of, sitting in fairly negative kind of territory, not doing a real lot, and they've been flat. On the other hand, we look at a lot of macroeconomic aspects and where things should go. You can make all those assumptions, but the actual crypto and digital industry is absolutely fundamentally shifting from where it has been, and it is maturing in many different areas. So that's probably what I see. There's certainly opportunistic trading. I mean, some of our derivatives traders are in there hitting things a fair bit. So obviously people have got a view on which way the market's going and they're taking certain positions. So I'd say spot retail is definitely down, but there's a bit of activity in that derivatives market.
Would you say people are like Australians right now are accumulating or sitting on their hands or selling or what are you sort of seeing?
We did see some sell activity into November, into December. Primarily now it's sitting on their hands, and we're getting spikes. When we saw with the changes in the Clarity Act, etc., where that goes, you'll see spikes. When you see Trump talk about Greenland, you'll see spikes. But in general, they're sitting on their hands, and I think they're waiting for some sort of more direction. That big run up that potentially people were expecting to see with Bitcoin, where Bitcoin prices were predicted to go, where we thought altcoins might follow and meme coins might follow, hasn't happened. And I think that's confused a lot of retail traders and kind of working out where it is. So I would say Australians particularly are sitting on their hands at the moment.
When it comes to being an exchange in Australia, there's like obviously a few options and competing. What sort of how do you look at the market and compete?
It's a good question because, Australia, as far as adoption rates of crypto, has one of the highest adoption rates in the world. So Australian investors have been early to the table. They've embraced this asset class. And there's been a lot of good exchanges. What I'm seeing though is that a number of them are probably getting a bit tired. The industry's now coming on to 17, 18 years. Not that any of them have been around that long. But I see there's an element of that. So a lack of innovation, I think now. There was great innovation early on. And I think a number of exchanges are also considering the interplay of the international exchanges coming on and into Australia, and what does that mean?
Mm.
The flip side of that, which I'm hearing, and it's been from several people in the industry that were working with some of the other international larger exchanges last year, at the beginning of it, towards the end of the year, they said they were seeing them retreating back because they felt that Australia was a pretty over-competitive or over-serviced market given the size of it. So that's what I would see. I see Australians that there is and independent surveys are showing this, another 20 to 30% of Australians are going to invest over the next 24 months. And I think as we've started to move, governments finally started to move with regulation, there will be a big shift. But I'm not sure that the new investors will behave the same way as the existing investors.
Is there sort of next big innovation in exchange? Do you think that might redefine the experience?
Look, the redefinition, I think, Fred, is going to come from this notion of DeFi and TradFi coming closer together. I know there was early views, and some people still share that view that crypto and blockchain was going to just dismantle DeFi. Um, I think it's absolutely going to enhance it. It's going to change it, and to the point where I think it's going to profoundly change the way that commerce is done and the way people invest. Um, but what I would say is it's not going to be dismantled as quickly. TradFi is not going to be dismantled as quickly as people thought. It's hanging on, and people's behavior. What I do think is that the industry, though, is coming much closer together. The innovative TradFi players realize that they want a piece of crypto, and the innovative crypto players realize that they need to get closer to TradFi. So I think that's what you're going to see. And that'll morph into all sorts of things. It'll morph into crypto platforms offering a much wider range of asset classes. It will morph into the tokenization, which has been a conversation for some time, but we'll actually start to see practical use cases of tokenization of assets. And I think it'll start with more of the digital security type assets first. Um, that's what we'll see. And we'll probably see a blending of, I'm going to call it almost banking-like services being offered by some of the innovative crypto exchanges, albeit there's regulatory issues to jump over there. But I think there's a big pent-up demand from consumers. They're frustrated how long it takes to get a credit card from a bank. They're frustrated at the hurdles that they need to go through and everything with getting lending. Now, the most responsible and best industry players in the crypto space are doing a lot with know your customer and those sorts of things. So that's maturing as well. And I think customers and consumers will have a lot more confidence in these new innovative companies that are regulated and upholding those kind of requirements, but can move so much quicker.
And when obviously we had this trend with the, international exchanges of recent. There's a bunch popped up of recent. Um, where do you see trust falling in, and what are you sort of seeing, and how important is that in terms of the customer's choice as to where they go and invest?
It's a great question because at the end of the day, we're all competing for a customer's dollar. It's their hard-earned money that they either want to make some more money trading or they want to make some money over the longer term via investing into this asset class and diversifying into this asset class. So, I think sometimes, and it's not always the case, but I think sometimes the diligence that people put into their financial, trust is more than the diligence they put into some of their other transactions. And because it does happen on the web, it's a nebulous thing. You're not buying a physical product per se. So trust is, there's been, examples where that trust has been breached because of various, cyber incidences and attacks. There's been incidences of where it's been breached because of bad actors. Now you get that in TradFi as well as new age industries, but I think it heightens consumer awareness of it. So it is really important. And I think the other thing though is that I find it a bit frustrating. And if I try and put a lens on as a consumer, almost every exchange, whether they be international or be local, say, "Oh, we're trustworthy, we're this, we're that." They say it, but I'm not sure if you peel back the layers and you really look at it. Now, that is only one cohort of customers, though. There is another cohort of customers who don't really know what's behind the scenes, and they do get caught up with a lot of the hype, or they simply hear, referral and that. So there's definitely two different clear cohorts. But to your question about trust, I think it's going to play an even more important role in the next couple of years for those who choose to invest in crypto.
Next sort of 2 years, obviously there's a lot of movement in regulation and things like that, but what do you sort of think the Australian crypto, I guess, not only buying and selling coins, but also like the actual implementation of things or the actual adoption of payments and things like that? What are you sort of seeing? What do you think is feasible, and what do you think? What's sort of your
That's
vision around that?
for me, Fred, that's a frustrating question and a frustrating issue that I'm dealing with as I lead Swyftx. to the next stage. Because as we know, the technology is there to enable an incredibly seamless experience for financial services. We can significantly reduce the transaction fees and the costs of consumers in undertaking payments and investing. The problem is, on the other hand, our regulators haven't yet caught up with it. They've been slow here in Australia. I think they've had unnecessarily challenges or challenged innovative companies unnecessarily. So that is being addressed slowly. But the other component we haven't got right here in Australia is the taxation. We could be cutting out from consumers the $6 billion that we keep hearing in the media and the RBA are being asked to address in relation to credit card surcharges, debit card surcharges. The crypto industry could wipe that out and it could be zero. We could give $6 billion back into the economy. But we're not going to do it if you have a tax regime that every time you transfer your crypto to fiat, you get taxed. Or that you transfer your crypto from one crypto to another, you get taxed. That's an impediment. So the frustrating thing I find is that, the government and even industry bodies talk about, oh, we want productivity to lift. We want this. You could have it. But the fact is, there's simple changes. You just take the tax off transferring your crypto into fiat. I don't get taxed, at all of these different points in the existing system. So I think that's a big impediment to what customers could be offering. The tech is there. So that's frustrating for me. We will see tokenization moving forward. I think there's been too much of a conversation around tokenization of, real world assets at the moment, property, etc., because once again, technically it can be done, but there's a lot of problems to solve for. But I think we'll start to see tokenization happening of securities and other digital assets in more simple forms. Maybe art, etc., etc. We'll start to see some level of tokenization. So you're going to see those assets moving what we call on-chain and being available on-chain. 24/7, 365 days a year is what people want. That's what's available. But you have a look at our traditional exchanges, the ASX here in Australia. You've got a 9 to 4, 5 days a week. People don't want that anymore. So we've got this archaic technology that's being hung on to for a whole range of reasons. Now it works, but blockchain and crypto would enable it to work so much better. And that's another frustrating point that I think. So I think that all of these things are possible. There's a bit of a collision coming, and it'll be interesting to kind of work out who's going to get there. I shouldn't say first, but who's going to get some of these breakthroughs because the customers want them. I think we're at a bit of an inflection point, a bit like where Uber and Airbnb were many years ago. They fundamentally flipped things on their heads. Those industries were not as regulated as financial services, so that does make things a little bit different. But we are at an inflection point in terms of what this industry can offer, what the customers actually want, and some of them don't even know they want it. It was a bit like the motor vehicle from the horse days, but also the Apple and the smartphone. We didn't know we needed it or wanted a smartphone, but once we got it, you couldn't put that genie back in the bottle. And I think this is where crypto and blockchain fundamentally are sitting at the moment. So it's a very exciting next couple of years.
That's incredible. I really like your vision around, tokenized stock trading. And I think even prediction markets potentially seem like there's another one.
Prediction markets are taking off. People want prediction markets, and we're seeing a lot of that. We're seeing that being driven, and this is another frustration that I've got. We're seeing it being driven in international markets, in other geos. Australia once again wants to kind of keep sitting on things. Now, we have a robust financial system here. There's no doubt about it. But you pay a lot of money as a consumer to have that robust financial system. Should it be robust? Yes. Should it be robust to the extent that it's robust and the lack of competition, the lack of innovation that is allowed to happen? I'm not so sure about that. So that's probably what I sort of see.
Jason, thank you so much for joining us on Crypto Finder. And it sounds like, very plugged in. I really enjoy your comments around where things are going, and I think it's very you always have a very deep vision about where the future is. So thank you so much.
Fantastic. Enjoyed the conversation. Thanks, Fred.